Thank you, Jane. Good afternoon, all. I'm Alex Passmore, the CEO of New Murchison Gold. New Murchison Gold trades under the code NMG, and NMG is a West Australian-focused gold explorer and developer. We're capitalised at around $77 million today, and hopefully on the way up as we progress our gold project into production in the next 6 months. The Aussie dollar gold price going through a record high of 4,500 overnight certainly helps the outlook for our project, and I'll offer a few thoughts on the gold price given that we have hit a record high. So before I was running resources companies, I did have another career in investment banking and in equity research and lending and hedging at places like Commonwealth Bank. So you'll forgive me if I can offer a. So the US dollar gold price is currently sitting around $2,700 an ounce, and that's been supported mainly by central bank buying of gold. So why would they do this? Well, gold is really a safe haven currency that doesn't offer a yield, but it does offer a deep, liquid and fully fungible market. So its performance, the US dollar gold performance, is usually driven by the global interest rate outlook. And since we've got a declining interest rate outlook in the US, that's very supportive for US dollar gold. The other longer term factor is the M3 money supply, which looking back over the past 20 years, there's 3 times more US dollars in circulation than there was 20 years ago. So all of those macro factors are very supportive for gold. And then in Aussie dollar terms, which is what we sell in, we really just overlay the interest rate outlook in Australia versus the US, and our interest rates look like they're heading down rather than up. So the Aussie dollar gold price has been outperforming. For every $100 an ounce move in the Aussie dollar gold price, for our project, which is a 2.5-year open pit in Western Australia, 2.5-year life open pit in Western Australia, the cash flow changes by $11 million. So every 100 ounce tick, and bearing in mind it moves $71 US an ounce last night, is quite important to us. So I'll give you a little bit of background on the project itself. So we have a large land holding in a region called the Murchison region of Western Australia, hence our name, over a greenstone belt called the Abbotts Greenstone Belt. So greenstone belts are usually where you find gold in Western Australia, and the Abbotts Greenstone Belt is no different. There are historical mines in our belt, with the first gold mining in our area occurring in around 1900. So this belt had historically been held by prospectors and had very much broken up ownership. So New Murchison has spent the last decade amalgamating the ownership of the belt, putting it together into a coherent package of exploration tenure and mining leases. And so we're now at the point where we have 677 square kilometres of ground, contiguous ground, and some key mining leases over the areas that we want to go mining. So in the Abbotts Greenstone Belt, the eastern margin of that, near a town called Meekatharra in Western Australia, is getting our particular focus. So on the eastern margin, there's a large shear zone, which is a good place to go looking for gold mineralisation. And there's a project there called Crown Prince, where we've been focusing most of our attention and doing most of our drilling. So while there was known mineralisation in the area in and around Crown Prince, we made a new discovery just offset by several hundred metres from the historical mineralisation around 2 years ago. And that was really a game changer for the company. So we discovered a new ore body called the Southeastern Zone, and that has a great endowment of gold mineralisation for an open pit. So it's shallow, starts at surface, has 2,000 ounces per vertical metre over key mining depths, and has a grade of around 4 grams per tonne once we take into account mining factors and dilution. So the resource currently stands at 280,000 ounces overall. We'll be mining around half of that, around 140,000 ounces in an open pit to start with, and then we'll be looking to go underground beyond that. We've put out a new resource in November, and we'll be shortly putting out a reserve statement and a feasibility study which shows exactly what the numbers look like. So you can expect that in the coming week or so, actually. So what number do we run the study at is one of the key questions we've been asking ourselves. So, spot price keeps on going up every time we try and rerun the number, every time we go to rerun the numbers. But our reserve and our project makes money when we use $3,000 an ounce, $3,500 an ounce, or $4,000 an ounce. So it's a very robust project. Every tick up that we get from here just makes the cash flow look better. So, given that we're in Meekatharra, we're in the Meekatharra area. We're next to the Great Northern Highway. We're surrounded by some major companies, so Ramelius, Westgold. There's some smaller companies, Meeka Minerals, Catalyst Metals. These companies all have mills nearby. We're not planning to build our own mill. We're planning to use one of the nearby mills. And the closest and largest and most cost-effective is the Bluebird Gold Mill, which is owned by Westgold. So we announced a transaction with Westgold back in May 2024, where they became an investor in us. And then more recently, in December last year, we announced an ore purchase agreement where they'll buy our gold in ore off us and share in the and we'll share in the milling cost, and they share in the upside as well. So we're very happy with that agreement. Westgold are a $3 billion Aussie gold company. It's a 33-kilometre haul to get to their plant. It makes a lot of sense for us to get into production quickly and efficiently. It doesn't expose us to any large capital expenditure before we can get into cash flow. So our capital expenditure is likely to be around $5.5 million, and the project at spot generates around $600 million in revenue over 2.5 years. So, at a normal sort of margin for our sector, it generates very, very good returns. You wouldn't normally mine a deposit so quickly, but given that Westgold have a 2 million tonne per annum mill, it lets us, mine this open pit over those 2 years and really take advantage of the high gold price. So the open pit, what does the Crown Prince open pit look like? Well, we'll be producing 60,000 ounces per annum, 2.5-year life. The head grade's looking around 5 grams, 4.8 grams, which is very, very impressive for an open pit deposit in Western Australia. So we've put in our mining proposals late last year, November, December last year. We've had a few minor questions back, as is normally the case, and we're answering the regulators' questions. We're expecting our approvals in March. And we see that as pretty low risk. So we've included a lot of the detail around what we've been doing in our last couple of quarterly reports. And they're also in the presentation that's available via scanning the QR code. So 2025, and particularly the first half of 2025, is going to be very busy for us. We're putting out earth-moving tenders in February, and we'll be awarding in late March. We'll be bucket in the ground, mining the deposit in April, May, and then commercial production from around June 2025. So lots going on and lots of news flow. So to look forward to, we've got early works commencing, we've got an ore reserve coming out, and closing that minor funding to get us into production. So as we look to production, and we look at the value of our company, $77 million versus the sort of cash flows, well north of $200 million that will be generated over the next couple of years, what's going to close that valuation gap? And our view is that as we get closer and closer to production and de-risk the project, which is very much coming in the next 3, 4, 5 months, that valuation gap will close. And then further out, we look to replicate our success at Crown Prince via going underground and also looking at some of the nearby targets and some of the other projects that we've got in that 677 square kilometres of ground. So it's a fairly simple story, open pit gold mining in Western Australia, taking advantage of the current high gold price, very low capital to start, very high return on that capital. Partnering with a big brother who own 18% of us, being Westgold, $3 billion market cap. And then lots of growth further out. So thank you for your interest today, and I encourage you to look at the presentation. Thanks.
Thanks, John.